Now is we're going to go to Danielle Di Marco. She is our real estate investment mortgage expert. She's going to give the update on mortgages. So I'm just going to have to do a little, the people in the room are going to have to listen to her through the speakers here. People online could see her. And Danielle, can you?
I am here. So today what I wanted to kind of chat about is purchase plus improvements. This is quite fitting with the topic of flipping properties, which Tim and Azad are going to be getting into more detail on. So next slide, please, Tim. With purchase plus improvements, it is a program that's offered by quite a few of the lenders. It's a way to incorporate legalizing basement suites, doing more extensive flips, renovations to get ready for tenants, the BRRRR strategy. It's a great way to add the improvements that you want to do to a property into the mortgage so that you're not using your cash savings to pay for these improvements that you could instead use to put toward a down payment on another property. So things like legal suites, like I said, kitchens, bathrooms, painting, carpet, flooring, garage, there, you name it, there's a lot that you can do to do the improvements to your home. Essentially, the lenders are looking to see, okay, what you're doing, is it bringing value? We've done furnaces before, adding in air conditionings, all sorts of things. Next slide, Tim. Thank you. Okay, so how it works is when we're applying for a mortgage, if you were thinking that you're going to do improvements and want to include them in the mortgage, make sure you're always giving your mortgage broker a heads up, as well as Tim and Azad, your realtors, because there's certain things that they're going to write into a purchase contract to make sure that we can accommodate it. And there's certain lenders that we're going to apply to depending on what type of improvements you want to do to make sure that your financing gets approved. So how we do it is we'll take your purchase price of your home, add the improvements on, subtract off the down payment, and that becomes your mortgage. The total price, including the improvements, is what your financing is based on. It's what your down payment's based on, your interest rate's based on. How we do the improvements is we get a quote. So from a reputable, general contractor, Tim and Azad, again, there's a whole network here that you guys can utilize. So they have general contractors in their corner that are reasonably priced, know how the programs work, and are able to provide the quotes really quickly, because the goal is to get the quote as soon as possible for the work you want to do so that we can get it approved before your financing condition deadline to make sure you're happy with the full package mortgage financing and make sure that you're able to do those improvements that you want to do. So how it works, just to give you a rough example, typically purchase plus improvements is up to $40,000. However, I was just telling Tim and Azad earlier, we have gotten up to $150,000 approved before. It really is going to depend on the property, the price you're paying, and what improvements you're doing. If you're going to buy a $350,000 property, it's unlikely we're going to be able to add on $150,000 of improvements, because the property value just might not be there at the end of the day because it's such a low price and such a large amount of improvements. So just in this example, I'm using the typical standard $40,000. So if you purchase for $350,000, you add 40, that gets you to $390,000. Your down payment of 5%, let's say, is based on that total price. So it's not on the price you're paying for the home, it's on the price plus the improvements. We do 5%, you add on CMHC, your total loan, there's your monthly payment. So what happens is, instead of coming up with that $40,000 out of savings, where you could be using it for another down payment, or out of investments where you're likely earning more interest than you are paying in the mortgage rate, or coming out of it, out of lines of credit where you're having to make monthly installments at higher interest rates as well to get it paid off, we can put that $40,000 into your mortgage. That principal and interest mortgage payment then pays down that improvement money. So it's all factored into the mortgage. You don't have a separate loan. You don't have separate payments. It's all in one. Tim, next slide, please. So you have 90 days. Some allow 120 days. And actually, funny enough, we've seen some go up to 180 days now, where you can have that much time to complete the improvements that you want to do. So keeping in mind some things, again, letting your mortgage broker know what you're looking at as far as, timeline that you need as well. Are you doing a full basement development? That's probably going to take maybe longer than, 30 days, 90 days. Are you doing a legalized suite? Again, might be more than 90 days. So that's going to help us decide which lenders do we go to and why. This one's important. The bank advances you the improvement money after all the improvements are complete. So it's your responsibility to come up with the payments to the contractor in the interim. You can use lines of credit, credit cards, savings, family money. Doesn't matter where you get it from. The lenders aren't asking for proof of where you got it from. They just want to know that at the end of the day, you've paid your contractor. And so once the improvements are complete, we order, they call it an inspection, but it's really not an inspection. The appraiser goes out, checks off all the boxes and said, okay, you said you were going to develop the basement, check. You were going to redo the cabinets, check. Check, check, check. Just make sure everything's done. And then as soon as we send that inspection into the lender, they review it and they approve it. And then your lawyer gives you that $40,000 back into your pocket. So if you already paid the contractor, you could just replenish your accounts that you use to pay the contractor. In some cases, if the contractor is okay waiting to be paid until the end, then we can direct those funds to the contractor directly. So the key is to have the work done, the work that you got quoted for, finished. If you decide to swap things, like let's say you say, okay, we're going to renovate a main floor bathroom, but instead of doing the main floor bathroom, you do a deck. Well, that might change things. So it's always really important to stay in contact with your mortgage broker to make sure that what you're doing is going to be okayed by the lender. So once that inspection's done, you get your money back. That money goes back into your pocket. Your mortgage payments are based on the total loan. So no money out of your pocket at the end of the day. It's fabulous. Now you've saved that $40,000. Maybe we can use that for investing in another property. So important notes just on the program itself. Ineligible items, typically things like furniture, blinds, electronics, and sometimes appliances. We can add appliances in if you're doing a kitchen reno. If you're not doing a full kitchen reno, then they typically won't let us include appliances in the mortgage. And then something I touched on already is typically 20% of the purchase price to a max of 40,000. If it's going to exceed the 40,000, we have to get permission, run it past the lenders, make sure they're okay with it. And then they'll typically order an appraisal to confirm that the post-reno value is in line with how much you're spending. So under 40, they don't need that appraisal unless you're putting down 20% or more. As long as your high ratio CMHC insured less than 20% down, it just goes to the insurer for approval. So another thing is weather dependent. If you're building anything that is weather dependent, again, important to let your broker know so we can make sure that we can go to a lender that allows a longer time frame. Let's say it's the middle of winter, you're likely not pouring foundation for, a garage at that point in time. So we might have to wait until spring. So that's something that also needs to be approved by the lender. I think that's it. Yeah, I was going to say that's it. So it's a fabulous program. It's a great way, whether you want to do an illegal suite, a legal suite, upgrades, improvements. Let's say you find a property and you need to renovate the kitchen in order to rent it out for maximum rental income, then great, grab a quote, let's throw it in the mortgage. So then you're only paying $50, $75, $100 a month in mortgage payment. You're not coming up with all of that money cash out of your pocket. And that's kind of the long and short of that program.
So thanks, Danielle. And for the people online, her contact details are right here on the slide.
Yep, they're up there.
Yeah, they're up there. So if you need to talk to a great mortgage broker, take those details down and give her a shout.
Yeah, thanks, Danielle.